The E-mini is oversold on the 5-minute chart, 60-minute chart, and daily chart, but it can always get much more oversold. Big gap down, possible measuring gap, possible exhaustion gap. We're at the bottom of different channels. Let me get rid of that one. And we're beyond the measured move based upon that. And remember we had this gap the other day with this double top, and I said it might end up as a measuring gap. Now we're below that measured move as well. However, it's a windfall profit for the bears, and because of that, some bears will use it to take profits. They'll buy back their shorts. And if a bear is buying back his shorts, he's not going to look to sell again 1 or 2 bars later. He's probably going to wait 10 or 20 bars, and he's probably going to wait for at least a couple legs sideways to up before selling. And the result is that you can get a fairly big rally in a bear trend. I'm not saying that this is going to be a rally today. I'm saying that it might be. It might be a bull trend day because we are so oversold by any measure on the 5-minute chart, 60-minute chart, and daily chart. Let me just try. This is the 60-minute chart. The market's always forming wedges when it's in the trends. So in bear trend, it's always going to be forming wedge bottoms. And most of the wedge bottoms fail. However, when it finally does reverse, it reverses from a wedge bottom. In other words, the bottom of a channel. We have a bear breakout of a bear channel. 2 chances out of 3, it's going to reverse up and go up to the top of the channel. All the way up here, I don't know. But if I draw a tight channel, like here, that is more realistic. On the 5-minute chart, up here would be the top of the channel. So if the bulls get a decent close on this bar, it's an okay swing buy for a possible low of the day. Higher probability, you wait for 2 or 3 or 4 consecutive bull trend bars. But the context, I think, is very good for the bulls. We have an extremely oversold market. We're at a measured move projection based upon the gap that this is the 60-minute chart. There's a gap in there, right? This low, that high. That's that 5-minute gap that I talked about over here. That low and this high, and we tested it a second time. And because of that, you have to be thinking that it's a potential measuring gap. What about shorting down here? Can we crash? We can always crash. In every 20, 30, 40 years, we do. So that means every 10,000 days or whatever, we crash. So is say that 1 in 10,000? Well, it has 1 chance in 10,000 of being that day. So worrying about a crash, I think, is not worth it. It's worth it if you're long, right? If you're long, you're obviously in trouble. But if you're a day trader, it's not worth it. Okay, suppose we do not close on the high of the bar. Then what? We're so far below the moving average. I'm going to wait. Bears will sell this bar, betting that it's a trend from the open bear, and that it's the high of the day. All right. They know that they're probably wrong, but they also know that this could be a huge bear trend day, and that they could make a lot of money, right, with relatively little risk, right? Probability, small. Okay, not a good signal bar for the bulls. Still a possible low of the day. In a situation like this, I usually do not take that buy and instead wait And the odds are we're going to reverse. All right, we have a big gap down below a channel. So, pick a number. 2 out of 3 chances we're going to reverse. But that doesn't mean we're going to reverse on the first bar or second bar. It just means we're going to reverse. The chances are. Sometimes you get follow-through selling like this, and then you get the reversal. Here, strong bear trend, strong follow-through selling, and then a reversal. If we get what we're looking for, or what the bulls are looking for, is a close on the top of the bar. And we could get it on bar 2, we could get it on bar 3. And the bears, I just let these go. The chance of this being a big bear trend day is small, or at least a big bear trend from the open day is small. We're very far below the moving average. Bear breakout below a bear channel. I'm not going to short down here. If we sell off for 4 or 5 bars, 10 bars, and then rally back up to the one high, closer to the moving average, and then form a double top with the one high. So if we go down like this and up here, I might short that if it turns down. That kind of opening reversal is fairly common. So you sell off, you rally to a double top, and then look to short. Here, big gap down, sell off, a rally, double top. I know the tops are not the same, but it's a double top or a wedge bear flag. Then you can look to sell. So big gap down, initial selling, and then a rally to the moving average for a double top. Bonds, I think, are incredible today. When's the last time you've seen the bonds up 4 points? Really, really unusual. Bonds are breaking out to all-time highs. That's the daily chart in bonds. Here's the monthly chart breaking to an all-time high. My opinion is that something is happening, and the market does not yet know what it is, but it will become clear sometime in the next few weeks. So there's something going on with the economy, or with the world's economy, or with the United States, and no one really knows yet what it is, but everyone knows that something bad is happening. Bears want a measuring gap. Remember, on that monthly post that I've made repeatedly over the past few months, I talked about the market getting down to the moving average. Here's the monthly chart, right? So right now it's around 1750 or so. I thought we would go more sideways, but it looks like we may get there pretty quickly. So I thought we would hit it around 1800. Not 1750. Do I still think we're going to form an early low of the day? I do. We are so extremely oversold that probably before long, anyone who's willing to sell for any reason will have sold. And the only longs left will be those who will never sell. Weekly chart close to this channel bottom. I've been saying that we're going to get down to this one as well. But I still think it probably will be years before we get there. However, this sell-off is so exceptional that it may not be years, it may be sooner.